Hi, everyone, and welcome to Behind the Numbers. This is the show where we go beyond the data to explore the people, the stories, and all the insights that really drive business success. I'm Dave Bookbinder, and I'm known as a business valuation expert and best-selling author, and I thank you for joining me today. Today, we're going to really unpack the role that people contribute in driving business value. And if you enjoyed the episode where I had the guys from Irrational Capital on talking about the human capital factor, you're going to really enjoy this one because I've got Kristof Gleich, who's president and chief investment officer at HAPI Capital Advisors today. Kristof, welcome to Behind the Numbers.
Dave, very good. Thank you for having me. Nice to see you.
It's great to see you. I've been looking forward to this one. I think you booked this probably like a year ago, so I've been watching for this one. Glad it's finally here. Tell the audience a little bit more about who you are, and then we'll jump in.
Cool. Yeah, I'm the president, chief investment officer of HAPI Capital Advisors. We're a 70 billion assets under management firm. We believe in active approaches to try and outperform in markets. Born and raised in the UK, married, 3 kids, lived in the US for the last 10 years.
All right. That's a great background. I thank you for that. Let's jump in. So I teased here at the opening about a concept called the human capital factor. And that's an investment strategy. I want to start off by talking about the core concept behind the human capital factor. And how did your partnership between Harbor and Irrational Capital come about?
Yeah, so look, let me sort of start at the very top. People matter in any industry. Business leaders across the world say it. What is the number one asset in any business? It's not the materials, it's not the plants, it's not the factories, it's not the equipment, it's the people. It always, has been in the modern economy. And I think even in the era of AI, which maybe we'll talk about, I think it will continue to be even more so. And yet, when you look at people from a valuation perspective, they are not accounted for correctly in businesses. People are considered a cost, which is really sad when you think about it. From an accounting perspective, we consider people a cost, not an asset. That's just plainly wrong. And so being an active manager, I consider myself highly intellectually curious. I'm always attracted by, how things work. Ever since really I majored in physics. So I just like to sort of understand things from first principles and really understanding fundamentally how things are, why things are. And I came across Irrational Capital 5+ years ago now. I'm a big fan of Dan Ariely. He's the co-founder. He's a brilliant mind in behavioral economics and really understanding what makes people tick in the workplace. And so when you think about bringing all of these different things together, I'm curious. We are trying to find ways of money management that can produce significantly higher returns just from passive investing. And in order to do that in the most efficient parts of the market, you have to think completely differently from conventional wisdom. And sort of bringing those things together, I just found the approach very intriguing when I first came across it.
Yeah, and I got introduced to Irrational Capital probably around the same timeline because, as you know, and maybe the audience knows, I'm championing the idea that people matter as well from the lens of a valuation professional who has valued human capital throughout his career and never thought that the methods that we use told the whole story. And to your point, every CEO on the planet pounds the table and says our people are our most valuable asset, but they don't show up on a balance sheet, certainly not in the way that we would like them to. So it was great to collaborate with them and yourself in the new ROI book series that I've published. Let's talk a little bit about the investable strategy component. So you have a couple of exchange traded funds.
Mhm.
We'll call them the HAPI family. Feel free to use that if that resonates. But the HAPI ETFs were launched based on the underpinnings of the human capital factor. Can you walk us through the research and the design process for HAPI?
Yeah, sure. So we've got 2 ETFs. We'll go with the HAPI family. I'll talk for simplicity. I'll talk about the large cap version, HAPI, and it's HAPI. So how do these? Let's sort of unpack how do these things work? So these are index funds. Now, people are going to say, well, you just said about active management, and these are index funds. We consider these active. Our definition of active is trying to create a different investment outcome from common standardized benchmarks like the S&P 500. So we've created an ETF that tracks an index that measures the human capital factor. So what does all of that mean? You could start with a universe like the S&P 500, and if you want, you can track the whole index, or you can try and find the businesses that you think are undervalued within that S&P 500. And there's many different ways of trying to measure, valuation and stocks that have been overlooked. What we focus on with the human capital factor are zero financial metrics, none. So there's not, and that stops people in their tracks because they're like, I thought investing was a numbers game. Well, it is, but it doesn't mean you just have to look at, and in this case, we don't even think you need to look at financial metrics. So what we do is we take those, if you like, the broader universe of 500 companies, and the first thing that we try and do is rank them on something called the human capital factor. And we try and isolate about the 150 best companies out of that universe that score the best on the human capital factor. And then we do something what's called market cap weight those businesses. So sort of proportionally how big they are in the market. We neutralize big sector exposures. So the sectors match roughly the S&P 500. The market cap kind of roughly matches the S&P 500. But you're really just isolating those businesses with the best human capital factor score. And then the ETF tracks those 150 companies. And then once a year, in every February, the scoring system gets re-updated with the latest data, and I can sort of talk about that in a second. And then the index, if you like, gets recast, and then that's the ETF for the next year, and then the same thing happens year after year after year. And that's sort of at the highest level how it works, but I'm happy to jump into more detail with the sort of the data and what we look at and what comprises that.
Yeah, and I just want to put an exclamation mark on something you just said, that it's not driven by financial metrics. When you think about traditional investing, people are looking at the normal ratios, if you will, and this is purely based on the human capital factor. So, yeah, I'm going to let you unpack that further. Maybe define some of the key components of the human capital factor that you focus on, and then talk about that data reset.
Sure. And then just to riff on your ROI, I believe that's return on individuals. Is that right for your book?
That is the new ROI, return on individuals.
Return on individuals, and I think there are millions of people and probably millions of machines looking at financial metrics. Intraday, intrasec, fractional seconds. Markets are very, very efficient. So to try and create an edge, and when you're competing against what everybody else is doing, it's really, really hard to do because markets are generally pretty efficient at taking all known information, translating that into a price. That's what markets do. So a big point about this is it's the data, the proprietary data that these ETFs are driven from is data that we believe that nobody else is looking at in constructing investment portfolios. So, to beat the market, you've got to do something different from the market, and then you have to do something that's different from the market and right as well. If you have those two things combined, you can add, what we'd call alpha. And so the first thing I would say is there's a lot of data that goes into ranking the human capital factor. Now, the human capital factor is comprised of 7 different underlying subfactors. I'll just list them off so everybody kind of has them, but don't worry, we're not going to talk about like all of them. But let me just kind of list them off. Number 1, organizational effectiveness. Number 2, innovation. Number 3, direct management. Number 4, organizational alignment. Number 5, engagement. Number 6, emotional connection. And then number 7, extrinsic rewards, things like benefits. Okay, so those, imagine like a value manager that's trying to find cheap stocks. They're going to have different ways and different pillars of valuation to try and measure cheapness. We have these 7 different dimensions of the human capital factor, and that we rank every single business on these 7 factors. You bring the 7 factors together into a single number. That's the human capital factor score. And then, as I said before, we then pick the top 150 and we build the portfolio that way. So let's unpack some of those factors, and what they are, and how they work. So the first thing is these are largely factors of how people feel, right? So we have to start with measuring how people feel. That's really difficult to do, and so you need survey data. And so we have, and when I say we, I'm speaking for the broader we, Irrational Capital, the ETF, HAPI Capital. But, Irrational Capital have partnerships with different data vendors and experts in data. And there are a lot of employee sentiment surveys that have been around for a long time, in some cases more than 20 years. And if you are able to ask consistent questions of employees on a consistent basis, year after year after year after year, you can take unstructured data, feelings, emotions, and measure them consistently. And then you can start to look at what that data is revealing. And so you can ask, and I'm sure many of your listeners or viewers have filled out various surveys before, but it can say things like, how happy are you in your job? From 1, strongly disagree, 5, strongly agree. You can ask questions around, do you feel fairly compensated? You can ask questions around innovation. And let me maybe sort of double click now into innovation. So that was the second dimension of the human capital factor. How do you measure innovation? There are a number of questions that you can ask that tease out a culture of innovation. For example, you can ask, do you feel like new ideas are encouraged in the workplace? 1, strongly disagree, 5, strongly agree. And by asking these kind of indirect questions, different ways, subtly different ways, that when you're kind of answering them, you may not realize, at the back end, you can build a very, very clear picture of whether or not the people at the firm feel like they are working in an innovative culture. The other questions, a really important question, and I try and encourage this at Harbour, is you want young people, junior people, to have safety in the workplace, that if they think there is a better way of doing something, a better product design, a better process design that is counterintuitive, runs against the grain of how they've been taught how to do things, you want them to feel safe and be encouraged in speaking up and recommending that new way. And by the way, if it's not a very good idea, you don't want to call them out for it. You want to celebrate them for thinking differently. And these are all really important things that lead to a culture of innovation. Now, why is innovation so important? Because, change is the only constant. Industries are constantly evolving. Technology is constantly evolving. Customer preferences are evolving. And so if you could isolate one thing and just say, look, if you could just find those businesses that have this culture of innovation, those are going to be good businesses. They're going to stand the test of time. And every time there's a competitive threat, they're probably going to either be ahead of that competitive threat or figure out how to pivot and adapt and be agile. Numerous companies that we've seen that have done this. And so that will then be a score on innovation. And then you want to rank those businesses high to low on innovation. And we do the same thing for all of those other 6 dimensions as well. And then again, it's measuring that single score based on those 7 dimensions, and then picking the best 150.
Kristof, I remember when I first became aware of the human capital factor and the excitement that I felt in seeing that these guys were actually demonstrating the things that I've been advocating for. I want to ask you to go back in the Wayback Machine to when you first became aware of it and share with the audience what your reaction was.
Sure. So I first came across the human capital factor 5 or 6 years ago. And I remember exactly when, actually, because I am an amateur and very slow marathon runner. And so I go for a lot of runs and I run slowly. So I have a lot of time. So I listen to a lot of podcasts. And I believe it was the Bloomberg Odd Lots podcast that had Dan Ariely, the co-founder of Irrational Capital. And he talked about this interesting research and development that they were doing at Irrational Capital, where they were trying to tease the link between equity performance and companies with good human capital. And that sort of got my interest. And, I was naturally intrigued, because it's not often I get something very different across my desk. So I heard this podcast and I thought, it sounds really interesting. It's scratching an intellectual curiosity itch that I have. And it aligns with my own kind of core belief system. I've been lucky enough. I've worked in some large, successful, organizations, and seen how those different organizations approach human capital management, and motivation and inspiration, culture, and all of that. And so I really, through my own observations, I believe it is really important and it's a driver. And it's different. That was good. So if you want to outperform in markets, you've got to be different and you've got to be right as well. But for every 100 things across my desk I see, 95% of them probably get immediately discarded, and then you end up doing one of them. So the bar's pretty high. And so you have to be cynical, you have to be skeptical. And when we're looking at launching a new solution or investing with a manager, we're trying to find something that we call alpha. And alpha just is a fancy way in our industry of saying skill, right? So quite a lot of managers do, or investors do, is they think they're being skillful, but they're just repackaging common risk premia or factors in the market, like quality or value or growth. And so my hypothesis, I always start with a hypothesis, is that the human capital factor, while it sounds interesting, it's probably just going to be a creative way of packaging a pre-known factor, aka quality. So what I expected to see was, when we ran this through all of our regressions and ran all of our numbers, we would largely see quality explaining the excess returns, because generally quality, is there's a positive return associated with quality. And so I thought we would see most of it from quality, and then some of it unexplained. And the sum of it that was unexplained was because they were measuring quality in a very innovative way, for all the things that we spoke about. However, when I sort of had my aha moment, was we saw the opposite. We saw most of it was unexplained, and a little bit of it was due to some common factors. And so that is highly suggestive of alpha, which is that this is something different from everything else. And so that was part of the triangulation. So I was excited, was leaning in, but I was cynical and skeptical at the same time. And then we really had to do our research, do the numbers, unpack this all. And, we ultimately concluded, and still to this day, that it was alpha rather than other prepackaged factors.
Yeah, and that alpha is what everybody is seeking. That's the outperformance of the market component. So when you talk about performance, the funds have done well. I'm going to let you talk about how they've done, but I also know, and congratulations, that Morningstar apparently just gave them a 5-star rating, which is the best that Morningstar can do. So I'll give you a chance to humble brag on that and talk a little bit about the performance of the funds.
Yeah, so the funds, so HAPI, which is the flagship strategy, has outperformed. So that's the one that is 550 odd million, I think, of assets under management. The ticker is HAPI, and it's looking to be a replacement or a complement to the S&P 500 exposure. So I think it's not controversial to say probably every portfolio in the world to some degree owns some exposure to the S&P 500. And we think that this is a good complement to take down some of that passive exposure and complement it with something that can be both diversifying and return enhancing. And so the proof is in the pudding, as they say, or as we say back in the UK. And it has now been around for a little over 3 years. 3 years is a significant milestone in our industry. It's when things like Morningstar start to track performance, and it has outperformed the S&P 500 by about 2.5 percentage points per year, which in large cap sort of blend or large cap core investing, which is where the category of where this thing lives, is huge. And so we're really proud of the results. We're really proud of what Irrational Capital have done and our partnership with them. And we've delivered very, very strong returns for our early investors. And we're eager to get the word out because we think this is we think this is an exciting different way of investing. It was awarded 5 stars from Morningstar, which is effectively just saying, according to how they do it, it's in the top 10% of the funds in that category. And bear in mind, there's hundreds and hundreds and hundreds of funds in this category. Again, to have this upstart, Irrational Capital, coming from a completely different field, they didn't grow up through investment management, powered by Dan Ariely's kind of lifetime of research in studying people and understanding what motivates people in the workplace, and then bringing this all together with a unique and empirical data-driven approach. It's an amazing thing. Now, the small cap version, HAPS, hasn't worked as well so far. It doesn't have as long a term track record. And in small cap, something interesting has happened in small cap investing in the last 12 months. You've had unprofitable small companies or junk companies just really rallying very, very hard for kind of other market reasons. And so there's been this sort of overriding factor headwind for the small cap version. But, I feel confident, and I believe, given the necessary amount of time, the small cap performance will reflect what we're seeing in large cap as well.
Well, congratulations on all that and the accolades from Morningstar. That's really well deserved. What's been the investor reaction so far? What kind of feedback do you hear from institutions, advisors, et cetera?
So for investors that are in it and have taken the plunge, if you like, they're very happy. They're delighted, and that's great. And I'm an investor, and it is. I think it is exceeded, or at least met, people's expectations, delivering uncorrelated alpha, idiosyncratic alpha, in line with what we all hoped and really expected that it would do. For clients that have looked at it but haven't pulled the trigger yet, they're going through their own journey. It is a different approach, and I think there's been this, hey, it's interesting, but I want to see how it does in the real world. I want to see how it does with real world dollars tracking the human capital factor. And so often you will see that allocators want to see a 3-year track record. And now that we are now seeing much stronger interest, and we're beginning to see more and more advisors across the country begin to allocate to it. So it's an exciting time.
Yeah, for sure. I'm one of those early adopters, if you will, putting my money where my mouth is. So full disclosure there. Um, getting close to the end here, but there's just a couple more things I want to get your thoughts on, Kristof. Kind of bigger picture outside of the investment realm, so to speak. But as a valuation guy who talks about the value that people bring to a business enterprise, I'd love to see valuation models start to incorporate some of these things. I'm curious to get your take on the future of that. Will the human capital factor ultimately change the way business valuation is thought of and the way deals are done for mergers and acquisitions, private equity investing, things like that?
Yeah, look, it already is. There are some very forward-thinking private equity firms today that are using this as part of their underwriting process before they'll make any PE investment. And so what we've talked about today is in the public market domain. That's because we, HAPI Capital, are public markets investors. And so that's where our interest lies. From Irrational Capital's perspective, they have this treasure trove of data across public and private companies. And as I understand now, they have relationships with some very, very forward-thinking PE firms. And this is now becoming a cornerstone of their underwriting and due diligence process before they'll commit any dollars to PE stocks, which must be a huge advantage. Because imagine there's less transparency anyway in private markets than there are public markets. So anything that helps you with transparency and shines a light on a business, you would, from a first principles perspective, you would assume there's even greater alpha in the private markets than there are in public markets. And again, I like to think of this as it's not an X-ray into a company, it's kind of an MRI scan into the soul of businesses. And if you could have that, that's extremely valuable, especially if you're in private markets.
Wow, really well said. An MRI scan into the soul of the businesses. I could not have said that any better. Kristof, anything that I didn't cover with you here that you want to make sure the audience knows about the human capital factor or harbor funds in general?
No, and I think I hope everybody's enjoyed, the conversation. I hope it's at least provided food for thought. Markets are always a two-way thing. You're not always going to get people to agree on everything. But I do think from a first principles perspective, to outperform public markets in highly liquid and highly efficient markets, you do have to take a different approach. You have to have an edge, and you have to be proven right over time. And sometimes that innovation comes in places that you weren't expecting it. And I hope folks out there listening have sort of heard this, and it's at least given them pause for thought to consider that actually this is a legitimate investment factor, despite the fact, or maybe because of the fact, it doesn't look at traditional financial metrics. And they see the value in it that we do, and it resonates with their own working experience in their professional lives.
Yeah, well said. And in that vein, tell people where they can learn more about the funds, where they can learn more about you, how they can contact you, etc.
So I'm on LinkedIn, and also there's only one of me. I've got quite an unusual, name and spelling. And then harborcapital.com. We have a ton of information on our website as it pertains to the ETFs. I think we have links to prior podcasts and things like that, and we've talked about it. And then obviously I'll give a plug for the sort of the brains behind all of this, which is obviously Irrational Capital. Their website, irrationalcapital.com, is a good source to go to as well.
That's really good stuff. So you're one of one on LinkedIn. I like that. Kristof, thank you so much for joining us today on Behind the Numbers. It's been a pleasure.
Yeah, Dave, thank you so much.
Sure thing. And thank you out there for tuning into Behind the Numbers. As I always say, if you liked the episode, please take a moment, leave us a review on Apple or Spotify. That stuff actually really does make a difference, and it helps other people find the show. And of course, don't forget, hit that subscribe button so that you don't miss an episode. Until next time, my name is Dave Bookbinder, reminding you that the numbers tell the story, but the people bring it to life. Take care, everybody.